This is the Asia Trade. I'm Avril Hong in Singapore.
I'm Haidi, Stroud-Watts in Sydney. The top stories this hour. Asian stocks have suffered declines after losses on Wall Street over concerns of more direct US involvement in the Israel-Iran war. Oil is at the highest since January. Bonds gain ahead of the Fed decision. President Trump meets with his security team after demanding what he calls Iran's unconditional surrender, fueling speculation that the US is close to joining Israel's attacks. And Xi Jinping says China is deeply worried about the conflict and is ready to play a role in restoring Middle East peace. We'll take a look at the picture across risk assets, particularly as we're watching energy markets, as we see oil just extending those gains, as those comments from President Trump spurring the escalation concerns in the Middle East and really spurring the speculation that despite sort of previous posturing, we may see sort of the hints of the US getting ready to join Israel's attack on Iran. We saw that 5-month high when it comes to oil prices on Tuesday. We also see this sort of potential focus on disruptions to crude flows across the Strait of Hormuz as well, with these elevated options trading, really what we're watching at the moment. When it comes to US futures at the moment, we're seeing quite a bit of risk-off sentiment there, about 0.3% lower when it comes to S&P futures. Nasdaq also off by about 0.4% as well. And all of this, of course, coming ahead of the Fed decision with so much uncertainty in terms of that macro and inflation outlook.
Yeah, absolutely, Heidi. I mean, we've been seeing also this week, it's all about these geopolitical tensions and really this Middle East headline-driven sort of risk that we're seeing in markets, not just on U.S. futures. We're also pointing lower in Japan. I think the Aussie dollar is also under pressure. And, of course, watching the yen, the weakness is more or less a dollar story. Of course, we did get the BOJ yesterday signaling that it's going to start slowing its pace of taper. Ueda-san's comments were also not very clear in terms of which way the BOJ goes next. So that kind of leaves the yen rudderless at the moment as well. But as you say, it's really about the geopolitical risk and the macro backdrop as well. Heidi.
Well, President Trump has met with his national security team to discuss the Middle East conflict, fueling speculation that the US may join Israel's attacks on Iran. Before gathering with his advisors, Trump posted a demand for what he calls Iran's unconditional surrender and warned Iran's supreme leader is, quote, an easy target. Bloomberg's Michael Heath has the latest for us, and it's sort of fascinating and quite rocky following, what we perceive to be the developments on the White House side, given that he denied that this was the reason why he was leaving the G7, right? What's going on here?
Yeah, I mean, I guess what sort of where it started from was he left the G7, and President Macron France's president had said that that President Trump was leaving, that there was talks about a ceasefire. And President Trump responded saying there's no talks of any ceasefire whatsoever. And so then there was this then fueled the question, the speculation of, is the US going to become involved? Is there the potential for Iran wants to come back and negotiate here? But there just seems to be a general enthusiasm. Don't want to say excitement, but just a general sense that Israel really has the upper hand here and that Iran is on the ropes. And we're sort of at a historical moment in a way where, for so many years, decades really, this talk of trying to prevent Iran from having a bomb, we could be on the cusp of it. But really what it comes down to and what everybody's focusing on is whether, if the US becomes involved, that then puts on the table what's known as the bunker buster bombs, which can penetrate some of these facilities in Iran that are deep underground, under mountains, and that nobody else really has the weapons that could destroy these facilities. So Israel certainly is, Prime Minister Netanyahu has been pretty clear, has been trying to sort of smooth the path for US entry, and Israel seems very confident in what it's achieved so far, and it's basically got total air superiority over Iran, which means they can fly without fear of their pilots being shot down, which is a massive advantage. I mean, it really leaves Iran exposed. Really, surprisingly, there hasn't been anything spoken about since this meeting with the security advisors. So we're all really on tenterhooks for where things go from there.
And you're talking about, the reason why this weapon is so critical is because it's seen as sort of the only answer to completely eliminating that nuclear threat. What threats does it come with, though? Because obviously it involves direct US military deployment. Does it also risk widening the conflict for the region.
Yeah, well, that's exactly right. And I think that in a sense, is Iran's ace, that if the leadership in Iran feels like there's no longer anything to lose here, that they're really on the ropes. I mean, Israel's sort of been hinting at trying to facilitate regime change. And if the US becomes involved, then it is a real game changer. Then it sort of opens up potential Iranian attacks or militia attacks on US facilities, and as you mentioned, the Gulf states too. Now, there's been a significant improvement in relations between Iran and the Gulf states that would suggest that's really a final option for Iran. It doesn't want to, if the leadership feels like it's going to remain in place and it's going to be okay, they really would prefer not to entangle the Gulf states, because they've managed to improve relations on both sides, and neither side wants that to happen. But if there's nothing to lose, then all options go onto the table, and you open up Straits of Hormuz and all these sort of areas that Iran could focus on if things get really desperate. So that's what President Trump has got to be weighing up. You know, it is a unique opportunity, but it comes with unique risks as well, and it's a real balancing act there in terms of assessing it.
Mike, as you say, it could be about Iran being on the ropes, Israel obviously targeting these nuclear sites. We're hearing about damage to Natanz. What about Fordo? And, what could the tipping point be in this conflict?
Yeah, well, I mean, that Fordo is the one that everybody's talking about there, and again, the bunker busters that I mentioned and the US involvement is sort of that's all connected there. I mean, whether this site, whether Israel perhaps has the capability or some way of doing this. I mean, one of the real signs of this conflict, or surprising parts of the conflict over the past 1.5 to 2 years, is just how many times Israel has surprised us with its abilities in these situations. But from everyone's understanding, it really is Israel doesn't have the hardware to tackle that. To tackle that facility, and if it can't be taken out, then Iran is still, its nuclear industry is still viable, and it can still potentially make the accelerated move towards a bomb. So that really is the question. But Israel does also seem to be looking to try to really put pressure on the regime. We know it's deeply unpopular in Iran, that the economic situation is very difficult. But by the same token, we also know that when a country comes under attack, whether it likes its leadership or not, they tend to rally around the flag too. So again, there's a lot of balancing that's going on in terms of judgments of what could go on here.
Mike, thank you so much for providing these insights into the conflict. Bloomberg's Michael Heath for us. And of course, we also have these G7 leaders meeting, and perhaps also overshadowed by the Middle East tensions, Trump leaving early. Sources say G7 leaders attempted and failed to move President Trump toward tougher sanctions on Russia while he was in Canada. And Trump is said to have argued sanctions burden the U.S. financially. Let's bring in Bloomberg correspondent David Gura, who joins us from Banff. So, David, where are we when it comes to trying to convince Trump of tougher sanctions on Russia?
Yeah, I should say, as Mike said just a moment ago, everyone's on tenterhooks. That includes the leaders who are here, who've been watching what's unfolding in the Middle East very closely and talking about it as well, paying attention to what's going on in Washington as well. But you're right, last night there was this dinner at which the G7 leaders circulated these documents, and they were able to cajole President Trump into signing that document focused on the Middle East, calling for a deceleration of this conflict in Israel and Iran. They were unable to convince him to pass or sign on to a more robust document on Ukraine. And so today, the focus very much was on that conflict, on the official program. Of course, President Trump is no longer here, but the day began with President Volodymyr Zelensky here talking with Prime Minister Mark Carney about the need for more sanctions. We saw Canada levy more sanctions on Russians to try to get Russia back to the bargaining table, the negotiating table. And we heard that over and over again over the course of the day, that that's what needs to happen here. So I think the hope is they'll be able to telegraph that message to Washington, where President Trump now is. He's been resistant, as you said, to applying more sanctions. There are two members of Congress, Republican and Democrat, who have written a piece of legislation that has about 80% support. 80 lawmakers are in favor of passing more sanctions on Russia. He's resisted that. And what you just said a moment ago, that he thinks it would have economic consequences for the U.S., is something he said a couple of times while he was here in Canada.
David, of course, it was a surprise departure for President Trump, and he later turned back and, said it wasn't for the reasons that perhaps Emmanuel Macron had been suggesting. How are the rest of the world leaders kind of dealing with the absence, the unpredictability, particularly at a time where there are conflicts on multiple fronts?
I think it was a profound disappointment for many of these world leaders. Certainly the G7 leaders had an opportunity to talk to him while he was here yesterday, but there's a whole group of others who were invited as guests by Mark Carney, the Prime Minister of Canada, to be here today. So that's Narendra Modi. It's the Prime Minister of Australia. I don't want to guess how long it took him to make the flight here to Alberta for these meetings, but he prepared, as so many leaders had, for the opportunity to sit down with President Trump one-on-one, thought through what that might be like, what potential pitfalls might be, what those landmines might be in those conversations. And of course, so much was at stake for him as it was for so many other leaders. Economically, the issue of trade and tariffs is something front of mind for many of these leaders. They were banking on having a moment to kind of bend the ear of the U.S. president to make some headway on those trade talks. They don't have the opportunity to do that. And then certainly in the case of Australia, there was that worrisome statement from the President of the United States a few weeks ago about the nuclear submarine project between the U.S., Australia, and the U.K. Certainly the Prime Minister wanted to have an opportunity to talk to President Trump about that. He didn't have it. If there was any assurance on that front, I think it's that Keir Starmer, the Prime Minister of the United Kingdom, did bring it up and said that he hopes it's going to continue here in perpetuity. So again, using him as kind of emblematic of world leaders who came here hoping that on the sidelines of this summit they'd be able to make inroads with the President of the United States, failing to have that opportunity because he decided to leave a day early.
Just that element of uncertainty when it comes to this American president. Our Bloomberg correspondent David Gura there on the G7 in Banff, Alberta, Canada. Let's take a look at how the markets are viewing all of this as we head into the major market opens in just about 45 minutes or so. Traders, of course, looking at these escalating tensions between Israel and Iran, the potential for U.S. involvement. Also, of course, the Fed rate decision as well. Garth Reynolds leads our Markets Live Asia coverage. Garth, you've been busy, certainly.
Well, I mean, yes and no. There's been a lot of noise going on. Markets have fluctuated quite a bit, but there are a lot of assets that are just kind of stuck in limbo. They go up a little bit, they come down a little bit. Equities overnight fell a little bit less than 1%. They're still in recent ranges. The only asset that's really been on the move is of course, crude oil. And even then, the move up in crude oil falls well short of pricing in a very strong chance of something like the Straits of Hormuz, a serious disruption to global oil supplies. There's just that massive uncertainty that you are referencing. That is keeping traders reluctant to move, especially before the Fed, which is coming up. But even just more generally, when you think of all of the issues on which, such as trade negotiations and other matters, it's vital for a range of world leaders to talk to Donald Trump, and they haven't been able to talk to Donald Trump. And in general, the US regime is built around the idea that he is the decider, and he's not really got the capacity to decide on anything at the moment other than what he's going to do about Iran and Israel, which means that things like trade negotiations and other matters are on the back burner.
It also gives you a sense of whether markets are perhaps underestimating this potential for fresh turmoil, and I think that's part of the insights that you've been providing recently. But wanted to ask you, Garth, as well, what will the Fed likely signal? What can they likely signal? Is there consensus on this?
Well, on the one hand, they're definitely not going to move rates. They're also likely to, especially Chairman Powell, likely to sort of stick with their current overall stance that they're in a good place. It's not that they're definitively moving away from the easing cycle that they started last year, but they don't see any rushing need to cut interest rates at a time when employment is still pretty strong. And although inflation has been moving in the right direction, it's still a touch elevated. The sting in the tail could be what the overall members of the FOMC deliver when it comes to their summary of economic projections, also known as the dot plots. What are they seeing there? And there's a fairly strong chance that they're going to be perhaps a little bit more concerned about inflation potential. That's just on the back of the tariffs, which, remember, we're in a situation where we don't know what the final tariffs may or may not be. And even if you assume that the tariffs stay at the levels they are now, which seems like a fairly decent assumption, that's still the highest effective tariff rate for the US in decades. That is going to feed into, or certainly the Fed officials are going to expect that to feed into inflation expectations, to push towards inflation staying elevated. That's going to make them reluctant to pencil in rate cuts, especially because, remember, if they pencil in rate cuts, that in and of itself will act to stimulate an economy that they're essentially saying doesn't really need stimulation, especially with, of course, the big beautiful bill and its big beautiful tax cuts, or maintenance of tax cuts coming along. That's also likely to be an assist for US growth, at least in the short term, on balance. So amid all of that, the Fed's actually in a bit of a tough situation, because if it sort of sticks with its concerns, then you've got a very good chance that they are forced to reduce their expectations for interest rate cuts this year to just one interest rate cut instead of the two that they had penciled in. That is going to be seen as hawkish one way or the other. It's also going to risk the ire of President Trump, who has been spending a lot of time recently talking about how Powell needs to cut rates for a range of reasons, with the most recent one being somebody brought to Mr. Trump's attention just how much the US government is paying in interest already on its debt. So he's now talking about the need to cut rates on that front. So that confrontation between the Fed and its independence and the US president continues to simmer and could break out. That's another risk for everybody to take into mind as we go forward.
Garfield Reynolds, who leads our Markets Live Asia coverage there at a time of such enormous uncertainty for market participants. Subscribers can get more on the terminal for all of this, plus the Fed decision, of course. TLAV Go is your function for the latest updates, our commentary and analysis coming through from our team of expert editors.
Coming up on the Asia Trade, former Australian ambassador to Israel, Dave Sharma, joins us to discuss developments in the Middle East. Plus, we head to the Super AI conference in Singapore to ask Insilico Medicine about AI's impact on drug development. Much more ahead. This is Bloomberg. You're watching the Asia Trade, and we continue to track the fallout from the conflict between Israel and Iran. The Chinese president, Xi Jinping, says China is deeply worried about the conflict in the Middle East, adding that Beijing is ready to play a constructive role in restoring peace and stability. For more, let's cross over to Shanghai, where our chief North Asia correspondent, Stephen Engel, joins us. So, Steve, big question is, what can Beijing do?
Yeah, that is the question, obviously. I mean, this is a typical narrative that Beijing has rolled out in these kinds of situations. We've had Ministry of Foreign Affairs come out with calling for, cooler heads to prevail and for all parties to that have influence over the situation to play constructive roles. And now Xi Jinping also saying that they can play a constructive role. But the big question is, what is that constructive role? He says they are deeply worried about the worsening tensions. Now, again, we do know that Beijing has the ear of Tehran, more so I can bet pretty safely than the United States or Israel, also has the ear in Moscow as well. So Beijing can play a constructive role in maybe trying to shape the response to what Israel is doing. But again, the Ministry of Foreign Affairs yesterday, when asked in their regular briefing, said that they called on all parties concerned, especially as though those that have a special influence over Israel, to stop the conflict from spilling over. That obviously is a veiled appeal to the United States. Now, again, there's the humanitarian side, then there's the financial side, and the oil markets obviously are critical to China. They get about 2/3 of their crude imports from the Middle East, and the concern there, obviously, is that the escalating tensions between Israel and Iran could potentially escalate and spread into other areas of the Middle East.
Steve, as we're chatting, we are getting the latest when it comes to the IDF saying that the IAF is currently striking an area of Tehran at the moment, conducting a series of strikes in the area of Tehran. So as we continue to monitor that, and of course there's no easing when it comes to this attack at the moment, and a lot of speculation over what the US might do in terms of its involvement, China, for all of its sort of desires to be an international sort of peacemaking influence, obviously has its own domestic challenges as well, right? We're hearing that policymakers on the economy side could be looking at some new measures.
That's right. So just across the street here from where I am in Lujiazui, we have the Lujiazui Forum, a financial forum, government-backed, where we're hearing from state media that Pan Gongcheng, the PBOC governor, as well as some other possible policymakers, will be giving keynote addresses later this morning. And state media is saying there will be some financial policies, major financial policies announced in those speeches. We don't know what they're going to entail. However, if you start looking at the verbiage from Chinese leaders, Li Qiang, the premier, on Friday reiterated the quote-unquote stop declining pledge as it relates to property. That is something policymakers last September also said. We need to stop declining we need to see a stopping of declining in the property market. And then we saw subsequently a bunch of policy measures rolled out. But as evidenced by the more recent numbers, aside from retail sales, which had a blip upwards in May, property continues to be a big drag on this economy. And new home sales were down, used home sales were down, property values were down, new property investment were all down. And again, on Friday, we heard from Li Qiang say property market has to stop declining. So again, that has led to some speculation that perhaps we could get some policies targeted at property here at the Lujiazui Forum, as well as we know Financial Secretary of Hong Kong, Paul Chan, is here. He will be signing agreements with the Shanghai government to expand their financial cooperation. That's led to speculation. The Connect link between Hong Kong and Shanghai could be expanded.
Chief North Asia correspondent Stephen Engel there in Shanghai, watching out for those policy announcements potentially today. More ahead on the Asia trade, though. This is Bloomberg.
Welcome back. You're watching the Asia trade. And of course, as we continue to track the fallout from the conflict between Israel and Iran, the key asset class that we've been watching and reacting, I think, the most keenly to this has really been commodities, particularly the spike in oil. We're still seeing, though, how New York WTI crude futures, they're still hovering below the $76 handle. But of course, it's been quite a spike from last Friday when the conflict first emerged. Other than that, seeing gas futures also ticking a bit higher. And in terms of the risk off, as well as the bid for safe havens, seeing gold at around the $33.90 handle, Heidi.
Yeah, what's quite interesting is sort of the relatively small-sized moves that we're seeing across a lot of risk assets. There's a lot of uncertainty, right, particularly as we await to see potential further involvement, if there is involvement by the US in this conflict. We're also awaiting the Fed decision as well. We're also looking potentially at a great deal of uncertainty still when it comes to the trade front, given that President Trump left the G7 without holding a lot of these sideline bilateral meetings with the leaders who had flown in to see him. So no further developments on there. And as you say, Avril, the biggest changes that we've seen really the continued climb into havens like gold and that continued sort of, incremental gains that we see across energy markets. Take a look at the latest pictures that we're seeing from over Tel Aviv at the moment, the latest barrage of missiles from Iran over Tel Aviv just about an hour ago. And just a few minutes ago, we did hear an update from the IDF saying that they're striking an area ahead of Tehran. Comes, of course, as these tensions in this conflict across the Middle East have risen. President Trump's meeting with his national security team fueling now speculation that the US may join Israel's attacks. Our next guest is a former Australian ambassador to Israel and now a Liberal Party senator for New South Wales. Dave Sharma, really great to have you with us. So this has just been an extraordinary sort of escalation in terms of the intensity. What do you expect to happen now? There's obviously a lot of speculation that there's going to be official US deployment and involvement. There's obviously the narrative that these so-called bunker buster bombs are the only way to really penetrate what is necessary to completely dismantle the nuclear program. Is that the path that you see ahead?
Well, look, to date the US has, obviously not been directly involved in the conflict, but they've been aiding Israel with their defensive effort against Iranian ballistic missiles and drones. Israel has been attacking Iranian nuclear sites, known enrichment facilities like Natanz, but Fordow in particular is thought to require the sort of massive 30,000 bomb, massive explosive ordnance bombs that only B-2 bombers can carry and that only the United States has in its munitions. So that has always been under consideration in Washington, and it looks like the National Security Council of the White House is considering whether the US might get involved to basically severely dismantle or degrade Iran's nuclear capability, because without attacking Fordow, Iran will always have a capability to rebuild their nuclear expertise.
Well, that's the optionality that I'm thinking of, right, because of the intensity of this attack and perhaps the surprise that it came from, particularly with negotiations still ongoing. If there is sort of restraint, I guess, is the view that that is going to kind of incentivise Iran and certainly the leadership in its conviction that it needs to rebuild.
Well, look, potentially. I mean, I think, remember with these negotiations, Donald Trump had always said, I'll give you 2 months to make a deal. After that, all bets are off. Well, 2 months expired last Friday, so I don't think we should be surprised. And it did not seem that those nuclear talks were making any progress. Iran was not moving on its red lines about retaining an enrichment capability and the potential to pursue nuclear weapons. I think now, though, President Trump seems to be saying to Iran that they should consider a full-scale negotiation, unconditional negotiation, and I think dealing with these issues which have been of such concern to the international community for some time, particularly their nuclear program, also their ballistic missile program, also their support to armed terrorist groups. Now, those have been issues that Iran has not been willing to put on the table with negotiations to date. So, as is often the way with negotiations, when different sides obtain different leverage or impose different leverage, you get a different negotiating outcome.
Senator, Avril in Singapore here. I'm just wondering what your assessment of the likelihood of US involvement is exactly, given the multitude of conflicts that the US has sort of had to mediate over and a trade war. What is the assessment?
Look, I don't think if we do see more active US involvement in this, I think it will be limited to a number of operations. There's not going to be a full-scale campaign like Iraq or Afghanistan, for instance, in the early part of this century. It will be limited operations designed to target, degrade and potentially destroy key Iranian nuclear facilities. So I think the United States certainly has the bandwidth to do that and the capacity to do that should it choose to do so.
Can I get your thoughts as well? I mean, given how this conflict could drag on, could be protracted, given what Israel has already been signaling. What do you think Australia's response needs to be? Does it have to sort of signal something beyond urging both sides to de-escalate?
Well, look, I don't think the Australian messaging to date has been particularly effective or grounded in reality. Look, our biggest interest, obviously, is to look after the safety and security of our citizens in the region. A second biggest interest is to make sure that any tensions that arise from the conflict do not manifest themselves in Australia, because we have many people who trace their ancestry either to Israel or Iran in Australia. But beyond that, we should be looking to support diplomatic efforts, but bearing in mind what is the outcome that we seek. And we want a Middle East that is at peace with itself, that can grow and prosper. And the truth is that Iran has been a massively destabilising force in the Middle East now for decades, not only through its pursuit of nuclear weapons, not only through its imperialistic designs on its neighbours, but through its support to armed terrorist groups such as Hezbollah in Lebanon, the Houthis in Yemen, its propping up of the Assad regime in Syria for many years, its fomenting of Shia militias in Iraq. What we would like to see is a situation where that sort of destabilisation does no longer occur. Now, whether Iran is prepared to countenance that or not, or at least whether this particular leadership in Iran is prepared to countenance that or not, that is a question for them.
Do you think Netanyahu is posturing when it comes to not just this conflict, of course, the approach in Gaza and the approach to other proxies across the region? Do you think that's conducive to adding stability?
Well, sometimes, there can be a sort of a false peace in seeking to preserve existing arrangements, even if they lead to instability. And I think what changed after the 7th of October 2023, after the Hamas terrorist attacks, is that Israel realised it could no longer live with or contain or deter these actors that had been arrayed around its borders. Now, whether it was Hamas in Gaza, Hezbollah in southern Lebanon across Israel's northern border, Iranian facilities implanted in Syria under the Assad regime, and the Iranian regime itself. And so Israel has this is why you've seen Israel basically take more bold military action than we've seen in some years, because it recognised its previous doctrine of sort of deterrence and containment was failing, and it needed to deal with the root causes of the problem rather than try and deter the manifestations of it.
Senator, really great to have you with us. David Sharma, who's a former Australian ambassador to Israel and Australian Senator for New South Wales.
Now, IEA Executive Director Fatih Birol says the outlook for oil markets may change rapidly if the Strait of Hormuz is closed.
There have been uncertainties whether or not another party will be involved in this the conflict in Middle East or not, whether or not always the question, the Strait of Hormuz, which is very important, is going to be closed for some time or a longer time. These are all questions on the table, because as we all know, Strait of Hormuz is extremely important for the global oil and LNG trade.
For more, let's bring in Stephen Stepchinsky, who leads our Asia energy coverage. Stephen, the concern for markets, even though not consensus, has really been about the potential for the choking off of the Straits. What are we seeing now? Because it seems like there are other measures that have been taken, including signal disruption in the Strait.
Right. So I think, yes, the Strait of Hormuz is that flashpoint that could potentially boost oil prices and gas prices globally. Right now, the flow does continue. There are some things that have been happening. For example, Qatar, a major exporter of liquefied natural gas, has asked ships not to go through the strait and wait outside until about a day before they're ready to load, just so that they don't get stuck in the Persian Gulf if there is, as a precautionary measure, just in case there is more conflict in the region. There is major jamming of signals in that area as well. There was a collision between two ships. That wasn't related to airstrikes by Israel or Iran, but it does indicate that navigation in the strait is becoming more challenging. Now, I also have to preface that the market is closely monitoring how the U.S. responds, because if the U.S. were to be brought into this conflict, they might also hit oil infrastructure. While it isn't as, explosive for the oil market if there were any impact on the oil output from Iran, it is a little bit different than what would happen with the Strait of Hormuz. Iran does export oil on shadow fleet ships, and if the U.S. were to strike any of that infrastructure, if Israel were to strike the infrastructure and their exports were to fall, there would be an immediate impact on the market of actual oil flowing to potential buyers in Asia and other places. So that would be a bullish factor and push prices up higher. So I think those are the two things the market's watching: how oil output or how oil infrastructure is affected in Iran, as well as the Strait of Hormuz, which if it's closed or if it's affected, that is the worst case scenario, with some analysts saying that Brent prices could rise to as high as $130 from where we are around 75, 73.
And certainly, a conflict and geopolitical disruption aside, the demand picture is not really improving, right? In fact, the IEA sees China's demand actually peaking earlier than perhaps we previously thought.
So, yeah, I think we're in a situation in the market where this is clearly a supply-driven risk-on sort of situation. This is the fear that there will be barrels taken off the market. It's not a fear that there isn't enough supply to meet demand yet, right now at the moment. Demand isn't necessarily super strong in countries like China. You're not seeing the strong economic growth that maybe some traders were expecting a year ago or 2 years ago. And you're also seeing a widespread expansion of EVs and other vehicles that reduce the demand for gasoline in China. Now, I do want to preface that by saying there is a somewhat rosier oil demand picture in the short term from the United States, where at the start of the driving season, that's when demand generally picks up. And it really depends on how has the trade war affected U.S. consumption? How has it affected the salaries of regular Americans? And will they be driving a whole bunch this summer and increasing consumption of gasoline? I think that's one data point specifically that the market will be watching, will be the demand there, as well as where does storage end up at the end of the summer as people consume more, and that drives down inventories across the country.
Bloomberg Stephen Stepchinsky there with the latest. As we continue to watch very closely these energy markets, more ahead on the Asia trade, this is Bloomberg.
Let's take a look at how U.S. assets are shaping up after a down day on Wall Street, really impacted by the concerns of potential U.S. more direct involvement in the conflict between Israel and Iran. Futures are pairing some of the earlier declines, but we're still seeing a bit of a bid for havens, which is interesting given how the dollar really hasn't been displaying that sort of quality recently, but we've been seeing a tick up, whether you're looking in U.S. dollar moves or the treasury space this week. Now, the Black Swan author Nassim Taleb says President Trump's approach to tariffs makes no sense and his economic team lacks expertise in the areas they're dealing with. Taleb, who's also an advisor for hedge fund Universa Investments, told us exclusively why he thinks Trump's signature economic policy is bad for the economy.
We need to worry because the approach is not very rational. First of all, they're amateurs doing numbers to start with. The other thing is when we have 4% unemployment, think about it, you have 4% unemployment. It means the economy, what are you going to do now with these tariffs? Try to shift business from high added value into low added value? This is what we're invited to do? Well, that will depress GDP. So in other words, it's like asking a surgeon, just for balance, to clean the streets one day a week, okay? So of course, it would depress GDP. That's exactly what the Trump administration is getting us to do. I understand tariffs. Tariffs may be necessary in many areas. Tariffs need to be symmetric and stuff like that. So this we understand. But the way they're going about it makes no sense.
Can you understand, the reasoning behind it? Because these are people, that Trump has around him. Scott Bessent, Howard Lutnick, Stephen Miller, who they're not idiots, right? They've done well in their careers. They went to Ivy League schools. Like, what are they? Why are they doing this?
There's a difference between, I mean, they're not idiot and they're not specialists in that area, and they're probably okay in what they've done in the past. Although
Peter
I'm not
Navarro.
sure about all of them. Yeah. I mean, Peter Navarro, I apologize, but I'll have to say that in his own domain, he hasn't fared well. Okay, the other ones had some kind of performance in an area that is orthogonal, in other words, uncorrelated to the current performance. It's like asking a dentist to do brain surgery. Okay, may do better than average. I'm not sure. Okay, so none of them really is a specialist of the area that they're discussing. You know, and this is where I find myself agreeing with economists, okay, that basically it makes no sense. And the approach is irrational. You see, the idea of confronting China is irrational. But now let's think about what are going to be the effect. Well, there are two things they're doing. The first one, tariffs on things that we don't produce. I mean, it's going to tax not the middle class, but it's going to class
the poorest among us.
The poor, because
progressive.
And then compensating that with a tax break doesn't work if you don't pay taxes.
Universal Investments Distinguished Scientific Advisor Nassim Taleb there, speaking with Bloomberg's Matt Miller and Shonali Barsak. More ahead on the Asia Trade. This is Bloomberg.
We're bringing you the latest on Japan trade data for the month of May. We're seeing a fall in exports of 1.7% versus the estimate for 3.7%. It's not as bad, but it still represents a slowing from the prior reading in terms of imports. 7.7% fall versus the expectations of a decline of 5.9%. That is the latest that we're getting on the Japanese trade data. Also on the trade balance, we're seeing the decline not as bad as anticipated. Heidi.
Well, Bloomberg has learned that Elon Musk's XAI is spending $1 billion a month as the cost of developing advanced AI models outpaces its limited revenue streams. Let's bring our tech reporter, Avril, who joins us from the Super AI conference in Singapore. Belle.
Yeah, I mean, really great scoop that we got at Bloomberg, but as you said, it really points to just how expensive it is to operate in the artificial intelligence industry. So a scoop for us and how Bloomberg's learned these details is through documentation that was shared with investors. So we're at the point, as you said, that we understand XAI, it's spending $1 billion a month. It is looking to raise, though, $9.3 billion. But again, when you stack up that cash burn versus how much they're looking to fundraise, I mean, they're going to be going through those funds in the space of just around 3 months. So it's really barely keeping pace. Now, this would be maybe less of a concern if XAI had some strong revenue streams at this point, but they basically don't. Again, according to documentation that was shared with investors, we understand they're looking to have revenue of around $500 million this year. That could raise to $2 billion next year. But you compare that to OpenAI, for instance, it's looking to have revenue of nearly $13 billion this year. So there's certainly a really stark difference there between XAI and some of its competitors in the market, like OpenAI and Anthropic as well. So XAI to its advantage, perhaps, but it does have a CEO, of course, Elon Musk, who has seemed to show a high level of comfort in the past with spending a lot of money on these sort of futuristic goals. So we saw, for instance, Tesla burning through the cash, SpaceX as well in the early days. But he can also be someone who gives very optimistic projections. And what we understand, again, from the documentation is that XAI predicts it's going to be profitable by 2027, but that is still 2 years ahead of OpenAI's projections for their own business. It could be a little bit too rosy, perhaps.
Yeah, the billionaire oftentimes seen as overly optimistic. But Belle, you're here in the Lion City for the Super AI event. I mean, what sort of conversations can we be expecting here?
Yeah, we've got a really great lineup of interviews this morning from this event. It is an event that bills itself as one of the biggest on the calendar for AI in the Asian region. About 7,000 people expected to come through the doors over these days, more than 1,000 speakers, and a really great lineup of guests as well in our programming. So one standout is going to be Grok. This is a superconductor, or rather semiconductor company that's making LPUs. So LPUs are not GPUs, of course, that we're familiar with from NVIDIA, but LPUs are language processing units that the company says makes the inference or the deployment of AI models much cheaper. So that's going to be really interesting, again, when you stack it up to that story like Tesla, for instance, or XAI that's really burning through the cash. How can we bring down the costs of deploying these models? But Insilico as well, you can see the Insilico medicine coming up in the next hour. This is a company that's integrating AI across its entire drug development process. They recently just exceeded their target for their Series E funding. So this week, closing $123 million. The expectation had been for $110 million. And they've recently as well submitted their paperwork for a third attempt at a listing in Hong Kong.
Bloomberg's tech reporter Avril is there from the event, and let's take a look at how we're throwing forward in just a few minutes or so as Australia. Japan comes online there as well. We're looking at S&P futures. We are looking like a bit of downside, some risk aversion there, unsurprisingly, given that we continue to watch these latest geopolitical developments with President Trump said to be meeting with his security team after demanding an Iran surrender in this conflict. We know that the conflict is continuing when it comes to Iran and Israel, and how that is going to sort of take the next steps with potential US involvement is what we're watching out for. This is a picture as we look at futures in Australia, off by about 0.25%. Avril, Nikkei futures also looking pretty soft at this point.
Yeah, and to your point about these risks, on top of what we're seeing in the Middle East, it's also about what the Fed can potentially signal at the end of its meeting. We'll be watching those dot plots as well as a summary of economic projections. For now, seeing Treasury futures a bit flat. Markets open in Sydney, Seoul, and Tokyo next. This is Bloomberg. This is the Asia Trade. We're counting down to Asia's major market opens. And Haidi, of course, it's really been the geopolitical fallout amid the Israel-Iran conflict and those concerns about the potential for more direct involvement from the US.
Yeah, some of the signalling that perhaps we're seeing markets take away from the fact that President Trump is apparently meeting with his security team. He's, of course, after that, quote, surrender from Iran. While the really conflict continues to escalate, we'll be watching very closely, particularly as these markets at the moment seem to be kind of trading sideways with not huge moves, even when it comes to those gains in oil.
Yeah, which is interesting also when it comes to stocks, how resilient they've been this week. I think the Nikkei in Japan is still not far from 4-month highs. We're seeing also after the gains of a day ago, more of that risk off filtering through into the markets, perhaps also speaking to the headlines that are coming out of the Middle East that's driving the uncertainty and the volatility in markets. So a bit of a back step when it comes to Japanese equities at the start of trading on Wednesday, but it's also really interesting because, of course, yesterday we got the BOJ and it signaled it was going to be slowing the pace of its taper when it comes to its involvement in the bond market. But when it came to these comments out of Ueda-san from his afternoon presser, he didn't really signal anything either way in terms of the intent of the Bank of Japan. So the question then becomes, does this leave the yen a bit rudderless when it comes to domestic drivers? It seems to be a dollar story today. 145.4 is where we're seeing dollar yen. And of course, Japanese bonds yesterday were under pressure, catching a slight bit, maybe part of that search for havens. Take a look at how South Korea has been faring, because we've been seeing a bit more caution creeping into stock markets there after a really blistering rally. We're seeing the Kospi a touch lower at the start of trade, this midweek edition of trading. The Korean won also, I think, part of the pickup that we're seeing in the dollar Korea won at around the 1380 handle, Heidi.
Take a look at how we're faring when it comes to that second session. As we just creep online here in Australia, we're seeing downside of about 0.1% there. We are seeing that acceleration when it comes to Australian bonds, though, as we see the sort of risk of haven demand playing through when it comes to things like treasuries as well as other sovereign bonds across the region as well. The Aussie dollar also stepping up a bit, 64.84. We're hearing potentially of the announcement of more supportive economic policies from the Lujiazui conference in Shanghai today from Chinese policymakers. So perhaps that is also supporting some of these China growth proxies like the Aussie dollar. Take a look at treasuries as ahead of that, of course, Fed decision. We're getting increasing expectations of at least one cut from the Fed this year and also more easing on bets of a more dovish leadership at the Fed post Jay Powell, and also watching sort of what we see when it comes to treasuries, given, of course, we've had such a difficult time, particularly on the longer end of the market. Avril.
Yeah, those bond market ructions, yet another layer of uncertainty for market participants to grapple with. So let's get more analysis with Audrey Goh, Head of Asset Allocation at Standard Chartered Wealth Management Group. Audrey, it's really been about the conflict in the Middle East for the past couple of sessions. I mean, what do you see as the main outlet when it comes to the risks for markets? Is it oil prices, and how is that perhaps going to complicate things for the Federal Reserve?
Well, I think it really depends on the degree in terms of outcome or the extent to which the conflict can be contained. And the main outlet for financial markets is really via oil prices. And for now, we have seen a spike up higher of oil prices to about $75, $76 per barrel. But if you were to compare that with the average price that oil price traded at last year, it is also around the same price, $77 per barrel. So at least from a growth year-on-year perspective, the increase has been quite muted so far. But that clearly is a risk. And even when we see a wider escalation to, say, oil supply, pushing oil prices higher, maybe towards the $82 mark or even above the $100 mark, I think that will be when financial market will be a bit more cautious versus the sideways, more range trading situation that we are seeing today.
Audrey, what is your expectation of the signal from the Fed? I mean, are we still going to see perhaps more clear-cut signals of 2 cuts this year?
So in the upcoming Fed meeting later tonight, we're expecting the Federal Reserve to largely stay on hold. But obviously, what's really key will be their dot plot refreshed, as well as any guidance or hints given by Fed Chair Powell during the media conference after the meeting as well. We're expecting that the Fed is still likely to deliver about 2 rate cuts from now to the end of this year. But obviously, the conflict in the Middle East sort of complicates this situation. It remains to be seen in terms of how oil price will evolve. And let's also not forget that we haven't really seen the net effect of tariffs actually hitting inflation for that matter. So I think the Fed would probably like to toe a rather cautious line and maybe not to give too much of outright directional guidance in terms of where rate cuts might be evolved from the 2 rate cuts right now that they have actually penciled in the dot plot.
Audrey, what are the risks when it comes to Asia, particularly when it comes to currencies, right? Because you've got both rising geopolitical risk and rising oil prices, potentially a combination that could give us a headway into the stronger dollar. Is that going to be something that plays into the narrative for Asia in the coming weeks?
So I think the recent spike in dollar, as well as the conflict in the Middle East, is likely to weigh on risk aversion, risk sentiment. So I wouldn't be surprised if we were to see some pullback in Asian currencies in the near term. After all, if you look at year-to-date, they have all did pretty well against this 8-9% drop in the dollar on a year-to-date basis. I think on a longer-term horizon, what we do see is that there is this shift away from dollar assets as well as the dollar for investors to really diversify into other currencies, and that includes developed market currencies like Euro Yen as well as Asian currencies. And we do see this longer theme playing out, which is also why we have also upgraded Asia ex-Japan equities to an overweight this month as well.
Diversification away from US assets is key when it comes to the strategy that you guys have. Does that look more towards Europe? Does it more sort of potentially also play into China as well?
Yeah, clearly China as well as Korea. Korea is also one market that we are also quite constructive on, and it's an area that we will buy on dipped. I think after the new president was elected, I think he has promised to embark on a pretty set of, bold set of reforms in terms of corporate governance, as well as, making the, trying to narrow the discount that, Korean corporates generally trade vis-a-vis Asia region, as well as the developed market equity peers as well. So net, we do see flows returning towards Korean equities. No doubt we may see some breather because they've done really well in the near term, but it is one area that we'll be happy to buy on dip, as well as to allocate more within our investment portfolios.
Audrey, what are your thoughts as well? I mean, we've been seeing amid the uncertainties, geopolitical risks, that treasuries, the dollar, they haven't really functioned the way safe havens would typically, but that's sort of shifted a little in the past week. I mean, what's your assessment on that?
So our view is that the longer-term trend of sort of de-dollarization is still ongoing. In fact, I think there are concerns about, U.S. fiscal deficit situation as well as policy unpredictability, which is really driving investors to really think deeply about their overall allocations to U.S. assets and U.S. dollars. So barring this near-term uplift that we see in the dollar because of risk aversion as well as the conflict in the Middle East, we do feel that the overall trend longer term for the dollar, we are actually biased to a bit of a weakness when it comes to the dollars. Which is why from an asset allocation perspective, we have been recommending clients to gradually use any sort of spike in dollar as a way to diversify of dollar assets into other currencies, other ex-dollar, ex-US assets. For example, US as well. For example, in Asia, ex-Japan, as well as the European area related equities and currencies.
Audrey, really great to have you with us as always. Audrey, go ahead of asset allocation at Standard Chartered Wealth Management Group. We do have some breaking news when it comes to capital rules on US banks. We are hearing that the US banking regulators are planning to reduce the enhanced supplementary leverage ratio, or ESLR, by up to 1.5 percentage points for the biggest lenders. That could lower their capital requirements essentially. That would change the overall ratio rather than excluding specific assets like treasuries. But we could see sort of the proposal for public comment on whether to carve out treasuries from that calculation. These changes would bolster banks' roles as intermediaries in the market, but there has been sort of some criticism that easing the leverage ratio may not encourage banks to buy more treasuries, could in fact overall have the effect of making the financial system more fragile. So the Fed Deposit Insurance Corporation, the Office of the Comptroller of the Currency, focusing on what's known on the enhanced supplementary leverage growth ratio, in terms of which banks would be impacted. They would be the largest US lenders, JP Morgan Chase, Goldman, as well as Morgan Stanley. So that would lower the bank's holding company capital requirement under that ratio to a range of between 3.5% to 4.5%. The current level is at 5%. All of this according to people that we've spoken to for this story. More ahead on the Asia trade. This is Bloomberg.
We're taking you live to Bath now, where the Canadian Prime Minister Mark Carney is holding a G7 presidency briefing. Of course, this meeting has kind of been overshadowed by Donald Trump's early departure from the gathering, as well as the conflict in the Middle East. Some questions as to the extent in which they've ultimately managed to convince Trump, these G7 leaders, of tougher sanctions on Russia, which was one of the agenda points initially, Haidi.
Yeah, and to that point, we're continuing to, of course, watch the reaction across oil markets, right, as this is most clearly expressed reaction to the ongoing geopolitical tensions in the Middle East. It could now potentially trigger US involvement. We're hearing that Donald Trump is meeting with his security team there. We're looking at some downside for the Asian stock market session as well, following the slump on Wall Street. But that is the picture when it comes to Brent crude. And what we're really sort of continuing to watch is what happens to the sort of seriousness of the situation, and whether that extension of the rally could continue after jumping to the highest level almost 5 months on Tuesday on these fears of supply disruptions. Let's get the latest developments with Bloomberg's Michael Heath. And Mike, so now we're sort of at the precipice of talking about what if there is US involvement and what it could look like?
Yeah, Heidi, I mean, as we mentioned earlier, the president met with his national security team, and prior to that, he'd called for Iran's unconditional surrender. Obviously, not in the sense of World War II German unconditional surrender or something like that, and also sort of made it clear that Israel and the US know where Iran's supreme leader is. These sorts of things. Now, since he met with his national security team, he's also held a phone call with Israel's Prime Minister, Benjamin Netanyahu. There's been no information on that call. And both sides, Israel and Iran, seem to be still going tit for tat in terms of missile strikes. So as we discussed earlier, everyone's sort of really on tenterhooks to see is the US preparing to join Israel. Prime Minister Netanyahu has sort of tried to sort of smooth the path there to make it clear to the US that the skies have been cleared over Iran. I mean, Israel was able to move there without being threatened by anti-aircraft missiles and these sorts of things. So it's a massive advantage in terms of not having to worry about your pilots and being able to get unfettered access at some of these areas. But the key point is that Israel wants the US in because it needs the US hardware. The US sort of has this what's called the MOP, massive ordnance penetrator that can get down into these facilities that are underground, that are under mountains, and these are GPS guided bombs that can sort of be dropped simultaneously to sort of and have the capacity to damage these facilities that Israel probably doesn't have the capacity to do now.
Mike, as you say, Israel sort of has the upper hand in things. Iran's retaliatory capacity also potentially restrained, limited at this stage. What about when it comes to retaliation and choking off the Strait of Hormuz? I mean, would it take such a extremely extreme action?
Yeah, I mean, look, it's a really important question, and that will be one of the calculations that the US will have, because obviously, the US is the superpower. So if it enters here, and Iran's been under sanctions for ages, it's not a particularly close match in terms of their abilities to fight. So Iran then would have to look at how it might strike back. And obviously, the US has a lot of military installations, and it has troops and hardware in the area. Whether that's targeted, whether Iran then moves its strikes away from Israel and towards US facilities to do that. And as you mentioned, the Straits of Hormuz, and we've seen that Qatar has been encouraging LNG ships to remain outside of the Straits until they're coming into, a day before they're due to come in and pick up deliveries. Presumably just to reduce the number of ships in the area. It's quite a choke point. But yeah, I mean, look, all these things would come on the table if the US does decide to join the campaign, and that's really what needs to be weighed up here. Are they close enough to thinking that they can get rid of this, the risk of Iran obtaining a nuclear weapon, that they can contain the fallout if Iran then does target US facilities, or is it just too much of a risk and they leave Israel to retard Iran's ability to do this, but it will only delay it by months. Israel has said a few years, but most analysts estimate it to be about 1 year that they can do it best.
Mike, it's just been incredible how after decades of simmering tensions, things have sort of come to a head. Thank you for sharing your analysis with us. Michael Heath, our Bloomberg editor there. Now we're taking you live to Banff as well in Alberta, Canada, where, of course, these G7 leaders have been meeting. Of course, as we mentioned earlier, the gathering has sort of been overshadowed by Trump's early departure. In order to deal with the conflict in the Middle East, you're seeing these live pictures of the Canadian Prime Minister speaking at the G7 presidency. And sources say G7 leaders attempted and failed to move President Trump towards tougher sanctions on Russia while he was in Canada. And Trump is said to have argued sanctions burden the U.S. financially. So let's bring in our Bloomberg correspondent, David Gura. He joins us from Banff for the latest. So what exactly are G7 leaders potentially signaling at this stage when it comes to these top concerns, perhaps overshadowed by the conflict in the Middle East?
Well, let me start with what's happening now, Avril, and the comments that the Prime Minister is making. He's talking about sort of what the G7 is and putting in this kind of long historical context. He's aware of the fact this is a multilateral institution that's been around for 50 years and has been kind of tried and trusted and true over that whole period of time. It's a forum for deal-making and diplomacy, and Prime Minister Carney really wants to restore it to that. So the message that we've heard from him tonight and we've heard from him earlier in this summit is it can't rest on its laurels. It can't be something that's based on nostalgia. It has to kind of change and evolve. To your question about sanctions, I think it's interesting to see sort of who's lined up behind those additional sanctions and who hasn't. Who has are 6 of these leaders. The other is President Trump, who is still resistant to putting more sanctions on Russia. It kind of illustrates the fact that this group, this organization has changed fundamentally. It's no longer a group of allies who are largely going to agree with one another on these broad issues of policy. There is this kind of fundamental disagreement that goes beyond a squabble. It's something that they really have to brook or get through. So where do they go from here? I think that you see more solidarity among those 6 nations plus the European Union going forward here on this issue of sanctions, on the way that they're going to approach Russia and this conflict in Ukraine. And what we've heard from Prime Minister Carney in the last few minutes is, this is a summit that largely centers on geoeconomics. He's looking ahead to another summit in a few days that's going to focus on the relationship between the EU and Canada. There's an emphasis now on bolstering that relationship in light of what's happened with Canada and the European Union's relationship with the United States. And also looking ahead to the NATO summit as well in just a few days' time, where security is going to be front and center. And I think we're going to hear an awful lot about what needs to happen in Ukraine for that conflict to meet a resolution that the leaders here at the G7 would see as viable.
PM Carney at the moment saying that Canada would have said more when it comes to Ukraine, and it's an interesting shift. You sort of talked around this idea of, I guess, the relevance and the influence of these sort of multilateral leadership gatherings when the US is always such an element of unpredictability. We knew that we probably wouldn't get a communique. It's happened before at these sorts of events. Has the role of these types of gatherings changed in terms of how impactful they can be?
I think they have. I think that's indisputable. And you saw that as all of this unfolded. I think you also see it in who these other leaders are who were brought to the table. And at the beginning of the session this afternoon here in Alberta, when Prime Minister Carney greeted the leaders of India and Australia, Mexico, these other invitees that he'd brought here to this summit, he acknowledged that's the most important summit, most important meeting of this summit, as he put it. There's a sense that they have to have an awareness of the wider world here if that alliance isn't going to be as tight as it was before. But there's the question, I suppose, of the kind of how much teeth this organization has going forward here. And can you really have an effective G7 summit like this one if you don't have the full participation of the United States? Now, you heard from a lot of these world leaders who are gathered here that it was promising and a good thing that the U.S. showed up at all, that we had President Trump here at least for half of this summit. But the U.S., of course, is the largest economy in the world and has an incredibly big role to play here at this gathering, at the G20, at the NATO summit, at all of these multilateral events. And the President of the United States can have distaste for how they operate, how they unfold, what these meetings are like. But I think there's also an awareness on his part that the U.S. has been important, is important, and I think he's kind of reckoning with how he uses that power vis-a-vis these alliances and with other world leaders.
Bloomberg correspondent David Gura there in Banff, Alberta, Canada. Well, still ahead, President Xi says that China is ready to play a role in de-escalating the Iran-Israel conflict. We get more on Beijing's potential contribution next. This is Bloomberg. Chinese President Xi Jinping says China is deeply worried about the conflict in the Middle East, adding that Beijing is ready to play a constructive role in restoring peace and stability. For more, let's cross over to Shanghai, where our Chief North Asia correspondent Stephen Engel joins us now. And Steve, we've had these sort of, overtures, the desire to be a global peacemaking influence from Beijing before. It's interesting, though, because we know that there is that dynamic between Beijing and Tehran and levels of indirect support historically.
Yeah, so we'll have to see what can China do. Obviously, as you rightfully said, Heidi, they do want to play a peacekeeping role globally. But again, that would probably be more in the form of behind-the-scenes discussions, perhaps because of its it has an ear in Tehran. We also know it has an ear in Moscow that could also wield its influence on Tehran as well. But again, what Xi Jinping is saying, that China is ready to play a constructive role in restoring peace and stability in the Middle East. We don't know how that constructive role would look like, but he did go on to say that he's deeply worried about the worsening tensions. And again, this is a common narrative coming from the top leadership in China. He says China opposes any actions that infringe upon sovereignty, security, and territorial integrity of other countries, and deems military conflict not a solution. So again, similar messaging from Beijing, but saying that they can help, and also saying that parties that have direct ties with Israel, basically a veiled reference to the United States, should take a more active role in promoting peace.
Even as it tries to play this peacemaker role amid a more challenging external backdrop, perhaps putting added emphasis on domestic policies. I mean, what are we expecting out of Chinese policymakers, especially at the Shanghai Forum?
Well, there are a lot of rumors swirling around, and we're not going to be peddling the rumors other than to say what needs to be unveiled by policymakers, as the local economy obviously is still kind of struggling. Obviously, is trying to put a fence between it and the geopolitical tensions and the escalating, or at least the very burdensome trade war with the United States. So on the one hand, we do know that Hong Kong officials, like the financial secretary Paul Chan, is here. There'll be some sort of signing arrangement or a ceremony this morning at the Lujiazui Forum, which kicks off today and runs through tomorrow, about increasing cooperation between the two financial centers. There's lots of rumors about perhaps some form of the Connect program, Cross-Border Connect, could be expanded. But again, the big focus will be on the PBOC Governor Pan Gong-sheng giving a speech within the next couple of hours.
Stephen Engel for us. Thanks so much. More ahead on the Asia trade. This is Bloomberg. You're watching the Asia trade. Let's take a look at how U.S. futures are shaping up, looking pretty flat now, pairing some of those earlier declines. And it's been interesting how treasuries have sort of been catching a bit of a bit this week, also ahead of the Fed decision, losing a bit of that at the moment. The dollar sitting flat as well. Now, the greenback has been in focus amid President Trump's economic agenda that's dragged down the U.S. currency, making it more difficult for the U.S. to finance its deficits. The consensus analyst forecast is now for the greenback to steadily fall against other G10 currencies over the next couple of years. And that's the focus of today's Big Take, and senior reporter Ruth Carson joins us for more. So, Ruth, the big question, I guess, is does this decline in the US dollar have more room to run?
It's a great question, and it's the multi-trillion-dollar question on everyone's minds, given how important the dollar is to the entire financial system in the world. The short answer and the consensus answer at the moment is yes. Just take a look at how the dollar has performed since Inauguration Day, or just before. It has fallen against every single major currency in the world, and against the likes of the pound or Swiss franc, the really important major peers like the euro, it's down more than 10%. Depending on who you speak with, whether it's Wall Street or someone along the streets of Singapore or Tokyo, everyone is betting essentially that the US dollar has plenty of room to run when it comes to losses.
So at some point, if things get bad enough, could we see a sort of a vicious cycle start to play in for the dollar?
And again, another great question. The short answer is yes. And recent history shows that this could happen incredibly quickly. I know a lot of traders who are still sort of figuring out what happened last month. For instance, with the Taiwan dollar, we saw surges in the South Korean won as well. And they really, really have huge impacts, not just across the $7.5 trillion a day currency market, but of course across everything from, for example, export companies, through to supply chains, through to bonds and stocks and all other asset classes, because currencies tie everything together. And so the short answer is yes. We could see potentially a vicious cycle of more and more, bouts of vol that really rock markets stemming from currencies occur.
to your point, these massive disruptions that we're seeing, not just for financial markets, for businesses as well, the question then also becomes, is there an alternative to the US dollar?
And again, that is the question that is being debated across trading rooms from Tokyo through to New York. The short answer is people are searching for it, but whether or not there's a truly viable alternative to the dollar remains to be seen. Now, our big tech shows that people are considering gold, for instance, as an alternative store of value. We also have the yen, the third most traded currency in the world, the euro, as another alternative to the dollar. But whether or not they can truly usurp or replace the dollar, which, by the way, is on 88% of all financial and currency trades in the world, remains to be seen.
Bloomberg senior reporter Ruth Carson there with the big take, and of course central bank policy will play a big role in how this shapes up, and the Fed is widely expected to hold rates on Thursday. Traders looking to Chair Powell for clues on what might eventually prompt policymakers to make a move. Let's bring Garfield Reynolds, who leads our Markets Live Asia coverage, and it's almost easy to forget that we have a Fed meeting this week.
Well, yeah, especially because it's very much the case that the Fed is not going to move interest rates. So that immediately takes a lot of the heat out of the situation. Even if we didn't have all these other events that are going on, the Fed meeting would be seen as being a reasonably low-risk event, so to speak. There are always risks around the Fed, but the signalling has been very clear before we went into the quiet period that the Fed isn't going to move rates, and the message that has been being sent is that most Fed officials are pretty happy with where rates are and are happy with the idea that they can wait and see what tariffs might mean for inflation. That's likely to go on being the case even after another good inflation print showing that cost pressures have been easing, but the real question for FOMC members is, will tariffs lead to higher prices and in particular to higher inflation expectations? And given that concern, they're likely to wait for some time before they actually move to cut interest rates unless the economy shows signs of rolling over. And while there's been some softness in data, retail sales overnight weren't brilliant, there hasn't been that sort of gotcha moment that says, okay, the Fed needs to start easing rates again sooner rather than later because the jobless rate is rising or because it's clear that the jobless rate will rise. So in that situation and with all these factors, what are tariffs going to do? What is the likelihood of oil prices being more elevated going to do? What are we going to get out of Trump's budget bill? And what's the impact going to be there, both when it comes to, again, inflation expectations and also when it comes to expectations for a possible boost to growth, if that's going to lead to a big fiscal expansion. So with all of that going on, it'll be steady as she goes with the Fed. There will be some interest in whether or not the dot plot shows just one more cut for this year, but that's going to be the focus.
So sort of low-risk event from the Fed this week, but it's also interesting how we're seeing rates traders, they've sort of been piling into bets that the next Fed chair that will be in the middle of next year could be a lot more dovish. I mean, are traders just getting ahead of themselves? And what is this going to mean for the risk, for the trajectory of rates estimations for the rest of this year?
Well, I don't know that traders are getting ahead of themselves so much. It's more that precisely, at the moment, that the Fed curve is a little bit boring to trade because we're stuck until we get some clarity on what tariffs mean for inflation, what they mean for the economy. So it's hard to see a lot of oomph in bets on where the Fed is going to go this year, given that profile, and unless you can read the tea leaves and say, oh, the economy is going to collapse, so they're going to start cutting rates very strongly in September, that would be a big outlier bet. So in that environment, and when you've had a little bit of a growing speculation that Not so much a growing speculation, it's more that it's come into the event horizon, as it were. We're now less than a year away from when Powell's term as Fed chairman expires, and it's very clear that President Trump will look to put somebody else in the Fed chair than Jay Powell at that stage. So if Trump's going to put somebody in, they're almost certainly going to be more dovish than Powell. And Powell is actually seen at the moment as being, to the dovish side relative to the rest of the FOMC. So in that situation, it's understandable for traders to pile into bets that the next Fed chair will move to cut rates. That's going to be a very interesting situation going forward, because that also is going to bring into focus the question of how independent the Fed can remain under President Trump.
Garfield Reynolds leads our Markets Live Asia coverage there. And we do have sort of the wrapping up of what has been both an eventful and uneventful in some ways. G7 in Canada. We had Canadian Prime Minister Mark Carney delivering his remarks and speaking to reporters, and just sort of wrapping up with a statement from the chair of this year's event. So really talking about the way that G7 leaders considered ways to collaborate when it comes to global trade. They expressed support for Trump's Ukraine efforts as well, and there was sort of some hindrances to a lot of the progress that had expected to be made, including a lot of the sideline and bilateral meetings that had been set up with the likes of Modi and Trump, with the likes of Prime Minister Albanese here in Australia, who'd gone over there to meet with Trump as well. But of course, all of those were sort of cast by the wayside after President Trump departed from the event early. Also, a lack of consensus, of course, when it comes to these geopolitical positions. And we knew, Avril, we weren't going to get a communique. We had a series of sort of joint statements instead, but really casting into, I guess, a different light in terms of how influential and substantive these leadership gatherings are now, given the sort of changing leadership style of the US president.
Yeah, and the relevance, I guess, of the question of some of these multilateral organizations and alliances. Of course, to your point about some of these leaders visiting Canada in the hopes of getting an audience with Trump. Among them was the Japanese Prime Minister Ishiba, hoping to get a sort of trade deal, but ultimately that sort of attempt fell by the wayside. And of course, this is of significance for the auto industry in Japan and ahead of an election in the country. So we're going to be watching if, potentially there are any other headway that can be made in that regard. But we're also hearing how the Prime Minister did agree with G7 to work on some China issues. We're going to have more ahead on the Asia trade. We're taking a break for now. This is Bloomberg. Well, of course, we're watching out for the China Open against the backdrop of the need for more domestic stimulus in the country and a key Shanghai Forum underway. And of course, one of the outperformers in terms of sectors in Chinese stocks, it's really been biotech, amid the optimism that potentially they're facing a sort of deep-seek moment. They have been outperforming the Hang Seng Tech Gauge, this gauge of Hong Kong biotech stocks. And of course, against this backdrop, one of Asia's largest AI events starts today in Singapore. Our tech reporter, Annabelle Jawlers, is at Super AI with our next guest. Belle?
Thanks, Avril. Yeah, joining us now is Aliper, co-founder and president of Insilico Medicine. That's a generative AI-driven biotech company. And thanks so much for joining us this morning, Alex. And I think we can start off with what Avril was just talking about there, that huge outperformance we're seeing in Chinese biotech stocks, where they're even performing or outperforming AI names right now. You do have R&D facilities in China, and I know other global locations, but what makes China a standout country for drug development?
I think, thanks for having me, first of all. I think China is a standout due to several factors. First of all, infrastructure. Like in IT, in tech, in pharma, China has invested over $1 trillion worth of R&D infrastructure and created the entire ecosystem around chemical synthesis, screening of pharmaceutical products, and manufacturing of those products. And that infrastructure supports not only local, domestic biotechs, but also global pharma industry. So that is a standout factor, and nobody can compete in the same degree with that scale and capacity. Also innovation. What we saw recently is that China innovates at unprecedented scale in terms of biotech, and we see more and more out-licensing deals coming out of China, where Chinese biotech sell their products, several assets to global pharma.
It's, of course, success sometimes can become a risk, and I'm thinking here about the US, of course, and pharma generally has been relatively insulated so far from President Trump's tariff threats or risks, but it still could change the situation. We spoke with Insilico recently about how you're compartmentalizing certain critical technologies, but could you share more details on how you're going about that particularly?
Yeah, we're a global biotech, right? So we have regional sites in Abu Dhabi, Middle East, in APEC, and global headquarters in Boston. In terms of our AI R&D, we're doing it in Montreal, Canada, and in Abu Dhabi, UAE. And that allows us to be extremely flexible, not only in supporting our clients in Europe, APEC, and North America, but also in advancing AI R&D in general. In terms of drug R&D, we're also global. We're working with global CROs. Over 50 CROs are working with us on chemical synthesis, testing, and clinical trials of the therapeutics we're developing. So I would say it's a global operation of regional facets and pockets, what we're utilizing to advance the programs.
So how exactly do you see these tensions playing out, and what's sort of the impact that you see, if at all, to your business?
Well, to your point, there have been certain macro developments on a global scale. We think that, well, healthcare in general is a universal right of every human, right, on the planet, and we are a global company, and we think that the progress, innovation will ultimately prevail, and our focus is on advancing our programs. So that's one thing we can do really well, and we'll continue doing that. In terms of macro environment, it will be dynamic, and we will monitor, but so far we have seen limited indication of it being affecting our operations.
Insilico really stands out for integrating AI across every stage of the drug development process, but AI-led drug discovery is a really hot area right now, and there's millions or billions of dollars that's being poured into it. So how do you plan to stand out over the longer term?
We are planning to invest more into R&D, both AI and drug R&D, start more new programs in therapeutic areas adjacent to the areas we're working on. We're very passionate about aging research and longevity, so everything we do is aligned around our mission of extending healthy, productive longevity for everyone on the planet. And we're entering into new therapeutic areas. Recently we've entered into metabolism as one of the therapeutic areas, and extremely hot area in general in the global markets, and we'll continue to innovate on both fronts, AI and drug R&D.
Since we're at a Super AI tech event, I want to ask as well about quantum technology, because this is an area that could really revolutionize drug development in the coming years, whether it's molecular simulations or enhanced imaging techniques, data analysis as well. How are you planning, or are you planning on integrating quantum technology into your production line?
To date, we have tried and tested several approaches related to quantum hardware, well, utilizing external hardware provided by vendors such as IBM, right? And we published a paper this year in Nature Biotechnology on how we use IBM 16-qubit computer available on the cloud to generate real molecules and test those molecules in oncology programs and validate those molecules. This is the first study to date that demonstrates that quantum can be used to generate experimentally validated structures. This was done together with University of Toronto, Alana Spurguzzi group, and we think that quantum hardware is not yet there, but when it gets there, we will be ready, because we'll have a first POC in that domain. Classical computing still outperforms quantum on many areas in our space.
Alex, thank you very much for your time this morning. That was Alex Aliper there, co-founder and president of Insilico Medicine. Haidi with Super AI just getting underway this morning in Singapore.
Thanks for having me.
We have more from the conference ahead. We'll be asking Grok about its ambitions to challenge cloud giants, including Amazon and Google. AWS tells us how AI agents will soon drive 90% of web traffic. Plus, Lightspeed weighs in on the future of India's AI industry. We're also getting some more lines through when it comes to the wrapping up of this year's G7's leadership meeting. Hearing now from the Japanese Prime Minister Shigeru Ishiba talking about some of the gaps when it comes to the trade negotiations with the US. There were gaps in understanding when it comes to tariffs, saying that he'll be heading to the NATO summit next week. He said that he's agreed to work with the US towards a win-win deal, with frank discussions having been held with Trump at this event, despite, of course, President Trump leaving there early. We also saw that meeting with South Korea as well, agreeing to communicate closely with South Korea's Lee. The failure to reach that trade deal with Japan and the US at the G7 summit was really one of sort of the disappointments there. The trade package, they couldn't get to the same sense of consensus on the sidelines of the G7. Ishiba had previously said that Japan will continue to actively coordinate with the US to reach that agreement. Trump had said that without a deal, the US would send a letter stating that Japan would have to pay if there's non-compliance. It would not have to do business with the US, according to President Trump. We saw that being reflected in some of the trade numbers that we had from Japan just earlier today, with exports falling 1.7 in May from a year earlier due to the pressure of those US tariffs on cars, as well as other sectors like steel as well. More ahead on the Asia trade. This is Bloomberg. Well, electric vehicles are gaining traction across OPEC nations, with notable sales in Qatar, Iraq, Iran and Kuwait. Our Bloomberg Opinion columnist David Fickling says it's a warning sign for global oil exporters. David joins us now. So tell us about the scale of what we're seeing across some of these, obviously very oil-dominated markets.
Yeah, I mean, it's somewhat surprising, the scale of what we're seeing. I think the real standout market there is actually the UAE. In the UAE, just looking at trade data, 10% of the value of car imports last year was battery electric vehicles. If you include all flavors of hybrids, that goes up to about 25%. For context, like Japan, South Korea, these are countries that produce electric cars, produce a lot of the batteries for them. The UAE basically has a larger share of battery electric vehicles than either of those markets at this point. Qatar is also about sort of 5% battery electrics, 7% including plug-in hybrids. These are not countries that are producing a lot of their own cars. That's not trade data sort of tells you all the cars that are being sold in the market. The only place in the GCC that is producing cars at the moment, on a very small scale at this moment, is Saudi Arabia, and they have one factory operating and two under construction, and 2.5 of those are basically for electric vehicles. One of them is a JV with Hyundai that will be electric and ICE.
David, to Heidi's point about these being really oil-dominated sort of markets, they're still trying to transition away from fossil fuels, all things considered. What are you seeing in terms of the potential impact from the ongoing conflict?
Yeah, I think it's an interesting one. Obviously, their dynamics are a bit of a different to the rest of the world. And one thing we've seen since the conflict started between Israel and Iran is that oil actually hasn't moved around very much. There's a lot of supply coming onto the market, and that's probably removing some of the geopolitical risk. In terms of being a car driver in the UAE, someone who's going to buy one of these cars, your petrol prices, your gasoline prices are heavily subsidized. So you're not going to be quite as price sensitive to geopolitical shocks as drivers in the US. You pay about sort of 60-70 cents a litre versus sort of 90 cents or so in the US. So you're not as exposed to that. And I think the main drivers are much more fundamental things about this. It's just very cheap. Electricity is even more heavily subsidized than gasoline. So you can fuel these cars almost for nothing. And also most people live in city-states, so they're not very worried about range anxiety or anything, because if you're in Doha, there's not very far you can go before you leave the country. So you're not worried about going on like 500-mile drives.
David, thanks so much for sharing your piece with us. Bloomberg Opinion columnist David Fickling. Now let's take a look at how U.S. futures are faring. We did see a bit of a knee-jerk reaction to those lines about the U.S. plans to ease capital rules, and futures are now erasing earlier declines, sitting flat. On the TAIEX, the optimism surrounding AI of late has been offset by these geopolitical concerns. A bit of risk-off in terms of what TAIEX futures are indicating. Similar picture when it comes to Chinese shares potentially on the mainland. A50 futures pointing about 0.2% lower. And amid all this, the story of the dollar, how it's been catching a bit of late, we're seeing a bit of a strength creeping into the Chinese currency.